And good morning. It's March 27th, 2025, 7:30 a.m. Eastern Time. And I have decided, sorry, I'm yawning. Don't want to put you to sleep. I've decided I'm going to make a video of myself, my thought process on trading and making trades with the simulated account with $1 million. People normally will say, well, $1 million fake money, it doesn't mean anything. Well, of course it means something. You tell a musician not to practice without an audience, or a chess player not to play online, only in real life counts. Of course it matters, um, especially since I haven't been trading for a couple of years. So good to get the motor skills and the habits back in place. Markets are always changing. The difference is exactly what it is. There's no money. So if it's a small amount of money I'm risking, then there's very little stress, and if you're risking your month's rent payment, then it's very stressful for some people. Just depends on your emotional makeup. But having the skills to consistently come into work every day and just do the same things and make money isn't going to matter whether it's real money or not, especially for a 48-year-old veteran, been around the block. Um, so but I'm making the video just so you can see this is what I think about, this is what I use, this is what I do, and do I follow any one system? No. If I did, I'd lose money. Um, you can have programmed trading strategies if you're super sophisticated. A lot of technology, I think you can make 50% a year. I think that's unproven. The people with billions of dollars to invest in technology and research. Uh, well, last year Renaissance Technologies made 20% on their investment return. I'm a human being and I'm a veteran and I've got great tools. This chart, here's my daily chart. This is Coco. And I've got an oscillator, a rate of change oscillator. I've got an indicator telling me this is sort of an oscillator too, but it's very simple. It just tells me where we're at. This blue line is a 5-period simple moving average, and I just want to know if we're up it, above it, or below it. And this tells me the exact same thing visually, how many days in a row I've been above it or below it. Uh, uh, don't need to go into all the details. It's just a tool I use. Been doing this for a long time. So when I click on a symbol, so if I click on the stack, it shows me my daily chart. Um, it shows me, then I program in two other things. I'm constantly having to change the number of bars, number of shares per bar. So I tend to keep this consistent. I want about 17 bars a day. It's just for all markets. I've just found that's through experience, that's just what works for me. And then when I'm actually trading it short term and looking for trade placement, then I'll come in here and I place this about, 1/5 of that. So here's my daily. Each one of these is each day. I've got my indicators here. Then this is really my bread and butter, what I make most of my decisions off of. Um, here's a Bollinger Band indicator. We're at the top of it, and now we're at the bottom of it. This is just a good indicator what direction I want to go. Normally I'm going the opposite, so we're down here near the bottom of this one, so I'm probably more interested in buying it. These little white lines, these get drawn automatically for me. Sometimes I use them more, sometimes I don't, but they show me when the market's been coiling, and a lot of times when it breaks out of these coils, it makes a move. But this red trend lines and blue trend lines get drawn automatically for me. Normally, if they're getting broken to the upside, it's markets going up. You could see here, this red one was broken. Some of these other ones were broken. Now we've got this blue one, so we're not. that close to these other blue ones. So if as long as we're breaking, we're sort of in between mode right now. Here's this blue one, the bottom. If it breaks to the downside, then I'll tell you sort of we're breaking it into high. Right now we've broken the red one most recently. So it's another reason why I'm more interested in being long than short. We got an oscillator here. It just gives me an idea on strength. You can see that this was a very strong move up. I don't need an oscillator to tell me that, but sometimes it's good uh, in when the swings, especially when you're going in a move like this, long-term move like this, to sort of gauge how strong was that swing down. You can see this had momentum than this one, but the other way you use this is you could see this is in a downtrend. So you could see this swing, and you say, oh, this one had was even more momentum than that one. Then look at this one. You know, this one had a very strong momentum, and this one less so. So a lot of times that's where your buying opportunities come up. This is called a divergence. It's making new lows, but the momentum oscillator is not making new lows. That's the idea. Same idea. Look at this strong move down, and then on this test, it's just not as there. So anyway, it's just another indicator. This one is an oscillator, whereas this one is like telling you range. So you have a strong move, it does go up. Doesn't matter what direction, if it's going strong up or strong down. It's just telling you we've had a move. So markets usually oscillate between directional movement and sideways movement. So you have a directional movement and then you have sideways movement. Then you have directional movement. So you can see this is just telling me, oh, we've been sort of going into this sideways movement for a while. So maybe we'll have a bigger move up. And then this one's even more indicative because it's very low. It stays very low sideways for a whole day. So that's sort of telling you there's probably a big move coming and just sort of giving you that. We just had this big move yesterday, so it's more likely to be a quieter retracement day. It doesn't always work that way, especially at the beginning of the move. You can see down, up, down. It's like this is when the market gets really active, and you're having either down or up. You don't really have a lot of resting time sideways, so that oscillates that way too. But that's just another indicator. Um, you got So you different indicators on different charts, and this one, my shorter term time frame, it's just telling me moment. It's just the same stuff all over again. I can't really go into a lot of details of why I make decisions why I do because in the end, um, if I'm using a system where I've got some sort of bias, what I think is going to happen, well, that's how you lose money. To be Try to be as objective as I can and use my experience. But those are the tools I use. I do use this thing in TradeStation. You can see what an awesome tool TradeStation is. But I've got this matrix. It just is reminding me what are the strongest markets for the past month, for the past week, for the past, sorry, this is the past week, 2 weeks, and 1 month. And I can sort this. Is telling me what the average true range is in case I use that. This, I take the average daily volume for the past 10 days and divide by 17 in this column. And so that just reminds me, oh, I'm looking at copper. Okay. I'm interested in a chart with each bar is 3,200. And then if I'm trading it, actually going to trade it, on the other chart, I'll just take this and divide by 5 and I'll put 600 uh, bars on the other one. So that's just how I use that. I've got my inside bar test. This pops up and tells me, did we have an inside bar the day before? Are we looking at breakout mode? You can see gold's up 2% today, up 70 points. It's a pretty big move for gold. So we had an inside bar yesterday, and then we have a breakout, and I look for those. Yesterday, yen had an inside bar, and then I look at for a breakout today. This is for this tells me what the bar was yesterday, and then these are programmed to pop up today if we're at new highs or new lows. So these two together are very powerful. Inside bar yesterday, breakout today. This tells me this is just the same thing I was showing on the chart. Are we have we been above the 5 period simple moving average for 6 days or not? 6 days, why 6 days? Because that means it's not 5 days, it is beyond 1 week, which is significant if things aren't just cycling through every week. But this starts to become significant that we're moving in one direction and I only want to buy retracements and blah, 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 blah. So, anyways, a lot of different indicators, lifetime of experience. This is what works for me and that's why I'm using those. So, anyways, I've got a couple comments I made to myself. You know, I think Nasdaq could have a little rally today, and then it might be a short. But we have to gauge the strength of it. Um, Bonds broke out to the downside, so new potential momentum to the downside. So want to be fairly aggressive on this one. The bonds, if we do get a retracement of some type, and even yesterday the market was selling off and bonds couldn't hardly move up. So I'm watching bonds. Let's see, gold could buy a retracement if it sells off a little bit in the middle of the day. It has a very strong move up. Then you might have some retracement, little ABC pattern this morning, where the morning momentum buyers pile out, and then might have some good follow through into tomorrow, and then I get out. So, anyways, different trading strategies, different time frames. Different markets, I do different time frames and different types of trades. It's just what I've learned through experience. I can't go into all that. Copper is the other one that's I'm watching carefully. I think we'll have a rotation day. We had a weird spike up and back into the range overnight yesterday, not last night, but the night before, and it's sort of just rotating around. But this is the strongest market out there. You can see this reading in the past week. It's got the highest weekly reading, highest 2 week reading, and the highest month reading. So these are all things that I can even put. I should write this on there. Oops, that's 2 week, and this is weekly. So just, especially if you have a really strong, really high reading here, but then on the weekly it gets it's low. Sometimes it's a good chance to retrace too. So, anyways, that's sort of the tools I look at. But in the end, I try to be in the moment, spontaneous, objective, use my experience, and be careful with what I'm doing. Use my experience in money management. That's the most important thing. That's more important. If I just blindly throw in any trade, I can just do that. If probably make money over time. You just have to know which ones to get out of quickly and which ones to stay in. It's not really about necessarily all these fancy indicators and making predictions. It's know where you have an edge, know what type of trade to look for, and then manage it accordingly. So, anyways, I will update you, see how it goes, and make some updates. Um, what trades I made, and so on and so forth. And that way you can start to see what I'm doing. You'll see just the way I talk. I know what I'm doing, and you'll see by the results. These are real results. Just because it's not real money doesn't mean you can predict the future. This is real time. It's a simulated account, but it's real time. And the difficulty of the task is only if you have some emotional baggage with having money on the line versus not. Other than that, it's the same. Just as hard to make money doing it this way, or is just as easy, really. Um, anyways, over and out.